Told you guys that I'm here for you, and my content is going to be directed towards what it is that you need, what it is that you want, and not what I want. And we're going to be talking about ICP today. And the one question that I've been asked is this: do I think that ICP will hit $20 this cycle? So we're going to look at the analysis. Is $20 a key number? Do I think it'll actually hit there? This is going to be honest analysis, and I'm going to give you my honest opinion. $20 to me is irrelevant. I'm going to show you exactly why, but I'm going to show you three key levels that if ICP breaks out, that I'm expecting it to hit. Will it definitely hit? We don't know. We're a slave to the market. We need to understand what's in front of us, when the market's given, when the market's taken, and to be able to time that right. So let's jump into ICP. So, firstly, thanks for the question, Maurice. It's always good that you do ask these questions because without asking the questions, you can't understand exactly what the outcome's going to be, what to expect, and how to prepare for that. Because I don't give financial advice, but I look at technical charts, I look at previous data and analyze probabilities based on what's happened before in the past. And then we use our indicators, we use our structure support and resistance, we use our Fibonacci, we use the special tools and indicators to help us determine how we can get the best probability of something happening. And the reason why I say we need to play what's in front of us is this: we've been in this range now on ICP, and we've been in this range here for 186 days. 186 days. This is the daily chart. Each one of these candles represents 1 day of price action. So we've been in this range. The first thing we need to understand is how big is the range? What happens if we break out? Where's the next resistance barriers? Is there limited resistance to get to the next big resistance once we break out of this range? Because you need to understand one thing. When you're in a range, in a bear market, one thing that's happening is it's accumulating, accumulating, accumulating. And when you get that catalyst that sends crypto into Altseason, then you expect these things to break out of ranges. If it's doing it in a bear market, you can expect it to do it in a bull market. So from the bottom of the range to the top of the range, we can measure that. All the way from here, all the way to the top. What is that? That's a 41% move to the upside. So this is what we're working with in the short term. What's happened in the short term? We've had a break of trend. You can see that this trend line held not once. That was the start. Twice, three times, and then four times before we got ultimately a breakout. So we've got a breakout now. We've got a retest. You've got your support sat here in this box here. That's your support area, and that starts at $4.45 all the way down to $4.30. If this is going to be rejected, it's going to fall back into trend and come back and test this previous low here. So it's going to be monitoring how far the pullback is, ensuring that we understand in the next couple of days, if we maintain a higher low, the indicators reset, we get another turn to put in a new higher high. And once we take out this $4.89, that's going to indicate the first time that we're going to get a trend reversal within this range on ICP for the whole of this move. So that's positive. That's what we can look at in the short term. What about the longer term? What about Maurice's question about $20? So firstly, when you break out of the range, you need to understand one thing. When there's a build of a price action, that holds a support once you break to the upside. So when you break out of this range, you expect this range to hold as strong, strong, strong support. Now, clues look left. We look left. Because there's limited price action and a limited build-up of price action between these levels, you expect limited resistance. There was an acceleration to the downside here. Once you break out of this big range here, you expect one thing, exactly the same, an acceleration to the upside. This is an acceleration gap, and that takes us to the next resistance point. This is $9. So what I'm saying is, if we've got enough momentum to break through this, which, by the way, guys, we've tested it once, failed, twice, failed, three times, failed, four times, failed. Within a bear market within the last 186 days. We've hit there lots of times. So we need to push up towards here, putting in higher lows, have enough momentum to push through, hold that as support, and then you've got your $9 to $9.21 as your next resistance barrier. Now, we're going to zoom out even further now, and if we break that resistance barrier, then we've got little resistance again to the next resistance, which is, of course, this downtrend. Now, what's this? April 2022. This is the start, or this is just nearly the start of the bear market. We had November 2021. We had a crash in November 2021. People didn't understand we were in a bear market until early 2022. Why is that? Because people didn't understand that we were going to put in a higher low and then a new high, or whether we were going to put in a low and then a lower high and a continuation down. So you don't understand when you're in a bear market until a few months after the bear market, because you don't know what's going to happen as far as the higher low is concerned, or flip it in reverse, the lower high. So this is early in the bear market, and you've seen rejection. Now, what I want to show you is this. That's $23. So in the bear market, we've hit $23. Don't forget, this hasn't had a bullish run yet. So $23. And then you've got the acceleration all the way up here to $35. So basically, how have I measured this? I've measured this from the most conservative way possible on ICP. We just look here. There's the real bad lower high that we had in September 2021 after we had this crash. This thing behaved differently in 2021 than everything else because it bled, got absolutely wrecked. So I've used my fib tool from this lower high, then all the way to the bear market low. That's where I'm getting the projections from here. So you got your 38.2% retracement, your conservative 38.2. How do you know that that's going to be a sticking point? Support, resistance. You understand that that's going to be a sticking point. That's all the way up here around about $35. So stick that on there. So do I know it's going to hit $35? I haven't got a clue. However, I understand just based on the analysis during the bear market that we've been creating this wedge pattern. When you're creating a wedge pattern, when you break out of the wedge pattern, expect an acceleration. When you expect an acceleration with limited resistance to go by, then you get the big gap. That's when you get the acceleration gap, and that's when you get the big push. So we've got some key levels there to overcome in the short term. We need to understand in the really short term what we need to do. We need to hold this level here as support, put in a higher low and start pushing on these ceilings, breaking through, holding the support up to the top of here. And then we want to ultimately break through, hold as support, and then you get the acceleration. So do I think it's going to hit $20? Unfortunately, I haven't got a clue, but we can look at this. You know that I do ICP a lot, so we can look at this. We can analyze what's in front of us at the time. And when we start getting really big swings and really big breakouts, we can look at what's in front of us then. Right? If you did enjoy this video, let me know in the comments, and I'll see you guys in the next one.